Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you.
Mike, the Federal Reserve bringing back quantitative easing?
Well, just as I was getting ready to talk with you, the headline came up that Chairman Powell said that they're going to expand the Federal Reserve balance sheet in order to resolve these repo funding issues that have been popping up the past couple of weeks. So I don't know what exactly they're going to call this, but in a certain sense, it is a minor form of QE. I don't think it's going to be as big as that, but it is certainly more evidence that we are not that tightening cycle that we're in a year ago. And if you recall, at the beginning of October 2018, Powell was hawkish. The stock market fell 20%. Then we, of course, rebounded in the summer. But since the middle of the summer, we've lowered interest rates twice. Now this news has come out. And in fact, the Fed Fund futures, as of this morning, have an 80% chance of another interest rate cut by the end of this month. Just 2 or 3 weeks ago, the odds were less than 50%. So, we've had news of soft economic data in the past 2 weeks, terrible manufacturing numbers in the United States, and also in London and in Germany, similar numbers. So there's signs of economic weakness. The Fed, I think, is responding to that, and then these repo things have been happening too.
Mm-hmm. And for people unfamiliar with repo financing, it doesn't mean they're about to take back your car.
No, it has to do with banks going to get money from Federal Reserve banks to loan to run their own operations, and there's been more of a demand and less supply there that has caused these issues to pop up. It's hard to tell how important that really is. It's kind of a real technical thing, and I'm not an insider in all the Wall Street banks.
Mm-hmm. Well, weren't they charging sky-high rates for the repo rate compared to the official rate set by the Fed?
Well, that's what happened, and why the Fed had to step in is there was a lack of liquidity, meaning that there is a sudden increase in demand on part of the banks for this money, and not an increase in the money that they're getting, and that's why the rates shot up. The demand, it's been said to be for different reasons. For example, companies needing money to pay their quarterly taxes was one thing float out there as a big cause of this. I don't think this is anything, though, like what happened in the summer of 2007 when, these mortgage securities are collapsing. Kramer got on TV screaming. I have no reason to think that we're in some sort of crisis or about to enter a banking crisis. But I just think this is one issue out there. And the biggest issue, though, is, we peaked out in the economic growth cycle. The yield curve has been telling us that for months. And then in August, the 2-year Treasury to 2 and 10-year Treasury bond market inverted, meaning that the interest rates on the 2-year bond went higher than the 10-year, and that's the most accurate indicator of recession in 12 to 16 months out. And interesting enough, the guy that invented this indicator came out this week and said, we're heading for a recession. However, he also then made a statement saying it's not going to be a massive one. It'll, so don't get too scared. So I think that's the way we should think about it. The problem is, for stock market investors, we are at sky-high valuations in the general stock market in the United States. And one indication of that is we've seen so many high-flying IPOs blow up. Uber blew up. Lyft blew up. That fake meat company blew up. And they've even pulled this WeWork IPO. And this is an indication of speculation in the financial markets kind of reaching its end. Something similar happened in 1999, 2000, of course, but this is something similar. Not exactly the same. I'm not saying we had this massive technology bubble, but when you see massive failures in the IPO market, watch out. And it's not just happening in the IPO market. Crypto coins have rolled over in the past 4 weeks. We saw a rally in Bitcoin this summer, and it's rolled over. It's gone through support of 10,000. It briefly fell through 8,000 today. And I think Bitcoin is sort of a leading indicator of where the NASDAQ is going to go. If you can recall that big explosion in Bitcoin up to 20,000, it occurred in December 2017. The Dow and the S&P and the NASDAQ then had a run up in 6 weeks later in January, February 2018, in which it then peaked out and fell 10%. So I think Bitcoin is something that it's closely correlated to the NASDAQ and the U.S. stock market, and tends to, I think, top out, and then fall ahead of the U.S. stock market. And it's just a similar sign. I think of Bitcoin as the most extremely speculative element in the entire financial markets. And like these IPOs, it's having big problems. And I think that's an indication of, to be cautious in the general stock market.
We'll have more with Mike Swanson right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Mike Swanson. Mike, we've seen an escalation in the U.S.-China trade war once again. One angle involving the National Basketball Association, another the banning of Chinese high-tech firms for alleged human rights abuse involving Muslims. I thought they were about to settle these trade issues.
Well, this is a key week in maybe one of the most important weeks of the year when it's said and done, because there's a Chinese trade delegation in Washington as we speak. They're going to meet officially with their counterparts Thursday. We'll find out if any deal of any sorts is made by Friday. And I'm not sure what's going to happen, but I think it's going to be a momentous event one way or the other. So what I'll do is give you the argument for what kind of deal could happen and why it would and why it may not. So issues such as you mentioned, the Chinese have already come out it made statements through their media outlets of what they want, which is basically to purchase more agriculture goods in return for delay of the Trump tariffs that are supposed to hit next week, and then in December, a rapid escalation of the tariffs. They want to delay those. In return, they say they will buy more agriculture goods, but they will do nothing else, is what they've basically asserted. And in fact, they came out this morning and said if the U.S. Does further sanctioning of their technology companies, they will act in some manner or another. So they've limited the scope of what they say they're willing to do and willing to give. In return, that's not that unexpected, because going into this week, there's no real reason to think that all issues would be resolved. In particular, the Trump administration started out this trade war saying they wanted the Chinese to stop their state industrial policies of creating these state companies, investing in state companies, and so forth as their biggest issue. Then, of course, this technology stuff. And there's been no evidence at all throughout all this time that China would ever agree to these things. In fact, they've said it would be an attack on their national sovereignty. So what we're essentially left with at the moment is something of a deal that would amount to a trade truce. And that was exactly what happened last December when the stock market fell 20%. The Trump administration agreed to a trade truce. Then we saw what happened in May, June, and July when that truce became unglued. So I think that's the hope we can have, is an agreement can come and last a truce maybe into the 2020 election. And I think, it's a rational thing for both sides to want to do. The Chinese to continue to hold off the tensions for as long as they can, stonewall, which is basically what they've been doing all along, consistent behavior. And for the Trump administration, if you look at his poll numbers, I'll just say the Gallup poll, just stick with that one, you will notice a very close correlation between the rise in Trump approval over the past 12 months and the stock market action itself. So, for example, in August, when the stock market dipped, his approval ratings dipped. And when the stock market bounced back up in September, his approval ratings went back up. And now they've gone down slightly as the stock market has fallen. Of course, this impeachment news is out there, but is it, the close correlation between the poll numbers stock market remains, and there's economic weakness signs as we talked about at the beginning of this interview. So from that standpoint, it would make sense for Trump to want to make a deal in order to keep the stock market elevated, to keep the stock market above its 200-day moving averages. Even though we have these problems of the pockets of speculation in the market, such as Bitcoin, such as these IPOs, there's been a rotation into so-called safety plays, what they call value stocks, consumer staples, such utilities, REITs, so forth, that could, in theory, hold the market up. But you got to have positive stock market average action for that to happen. You need a trade truce for that to continue. So that's the argument for a deal being done. Unfortunately, I can turn this around now with this impeachment news, which may be changing the overall political situation, where Trump could say to himself, look, I can't stop impeachment. I can't stop coming recession no matter what happen. A trade truce won't be enough to stop an economic recession. So let's just go full out on a trade war. Let's create a confrontation, a real crisis. Maybe that'll get some, excitement in the poll numbers among his base, because Americans will rally around a crisis. And then he also has the ability to scapegoat the Democrats and the people who want impeachment if the stock market goes south and the economy turns down along with it. He can then say, if it was not for impeachment, if it was not for Democrats, then we would be in economic paradise. So from a political standpoint, I could see at this moment how going this route of letting of further confrontation, just let everything fall apart, could be in Trump's mind to his benefit. So I have no opinion. I'm not making any bet on whether there'll be a trade deal or not. I frankly don't know. I can see both reasons. And unfortunately, in the financial world, at least in the media, people want the market to go up. I want the market to go up. But that clouds people's judgment into thinking that these things must therefore happen because I want them to happen. And all year we've been hearing a trade deal's coming on CNBC by people that appear on there, and nothing has happened. The tensions have increased this week. And I think as investors and stock market participants, we've got to be prepared in case things turn down and there is no trade deal. So that's what I'm going to do over the next 72 hours.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, just before the break, you said you were going to take action to kind of protect yourself here, depending on what happens with the China trade talks. What kind of actions might those be?
Well, the simplest thing anyone can do, and you don't need to think, well, I've got to sell everything I own because I'm worried about something that might happen or the stock market may break down or something like that. The real key is to be properly diversified. So, we saw in August, I would say, if there's no trade deal and there's another dip in the stock market like that, expect something similar to happen. So what happened in August was the S&P fell about close to 7%, but when it dropped, bonds went up. The TLT ETF, for example, which tracks the 20-year Treasury bond, soared, but gold soared, and so did mining stocks. So what I think people should do is make sure they own, some precious metals and Treasury bonds in their accounts, and if they're so heavily weighted in the stock market that they don't own enough of those other two things, then pair off their stock, their SPY funds or FANG stocks or whatever it is they own, get in some gold, get in some silver, get in some mining stocks, because those are likely to benefit and go up. I also think they're good investments anyway, because right now gold and silver is consolidating. The gold went to 1550. Actually, gold, I should say, went from 1250 to 1550 from May to about Labor Day, and pulled back down over the past couple of weeks, and appears to me to be consolidating in a range. Now, if there is no trade deal, that consolidation is likely to end very soon. If there is a trade truce, then it may last into Thanksgiving or December and then break out to the upside. So either way, I think gold and silver is a good investment people should have. And the most important thing, I know most of your listeners are more sophisticated and probably have such investments, but others, that find this, and American investors are not. And most of them only own U.S. stocks, only think about Apple, only think about Bitcoin and marijuana stocks, and don't own gold or silver. And it's those people that really need to take this moment to just to take action, so to speak, and I think move into these other markets.
Gold and silver, are they still something that's going to expand, or could they be in trouble as well?
Well, I think no matter what happens with this trade news, if we look over the next couple months, we can expect lower interest rates. The Fed Fund futures are projecting a cut at this meeting and then more cuts, let's say in the next 4 or 5 months. And that's a positive backdrop for gold, because the lower the rate of interest goes, the cheaper and more sensible it is for institutional investors and people that have a lot of money to put gold in their accounts as a hedge against money printing, against future inflation, the U.S. dollar, and so forth. And I think that's the real reason gold and silver have gone up since they turned higher in May. Basically, they broke out as that first interest rate cut of this year happened, and more rate cuts are to come. So I think when you just look at the cycle, the big picture, I think they're the best place to really be invested for the next couple years. And gold and silver, even though they've come off a little bit since Labor Day, are substantially above their 150-day and 200-day moving averages. And as a general rule of thumb, you want to buy dips on markets, sectors, or individual stocks above those moving averages. And if you own stuff below those moving averages, you want to pair those positions, because that tells you what the long-term trend is. When something, and right now the U.S. stock market is basically hanging on to those moving averages. It's bounced off of them, let's say 3 times this year. Just last week was the last time. And it's in a position where if the trade talks break down, it's going to go through it, most likely. And if not, then we can, have some sort of bounce again or go back up to 3,000, the S&P 500, but we'd still be in a position where we may break down before at the end of the year. So in a certain sense, the trade talks are the biggest news event probably for the rest of this year. However, the ultimate direction of gold and silver and even the U.S. stock market, I don't think is really going to change. I mean, either way, I think gold and silver are going to break out again. It's just a matter of when. If the talks break down, it'll happen sooner than it would otherwise. But either way, it's just a matter of time. And I think that's what people really need to focus on as much as they can.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.